What's going on, everybody? Welcome back to another video. In today's video, we are going to talk about Google and what is going on with it and why most people should probably buy into this stock. So with that being said, let's go ahead, cue the intro, and get right into this one.
I've been getting dirty money.
Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's gonna help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video.
Okay guys, you see up on my screen right now is Google. Obviously you use Google for everything. If you ever have a question, you ask them what it is or what's going on with it 99% of the time if you don't know somebody that knows what's going on with it. So what I want to do today is they just announced this, the 20-for-1 stock split. Everybody remembers when Tesla did this. So let's go ahead and get rid of this screen here. And we're going to pull up Thinkorswim because we all know we love Thinkorswim. And I'm actually going to minimize the other window I have of Thinkorswim. And we're going to go to Tesla. Why? Because there was a major rise in Tesla when the stock split. But now Google is going to do this. Do you guys remember when Apple was up over like $300? And I know I have Apple over here. Apple was up like over $300. Then they split to like $100. I think it ended up being like $125. And now we're at it topped out at $182. And now it's back down to $164 because of the whole market scenario and everything. But Google is now splitting. And guys, Google has done nothing but great things, guys. Just absolutely fantastic things. Hasn't even been below $1,000 in God knows how long. But that doesn't matter because now we have Google splitting. So what is this going to mean for most people? Well, realistically, basically, I'm going to give you the definition. You can read it here. Announced on February 1st, earnings release that it is going to do a 20-for-1 stock split. That means that on July 15th, shareholders will receive 19 additional shares for every one that they own on the record of July 1st. So you have some time to start building up this position on down red days. Like we've always said before, is we like to build positions on red days. I mean, you don't want to buy the top. Nobody wants to buy the top. So why buy on a green day? My philosophy hasn't always been, sometimes I've bought on green days, on small green days, if I think it's a good opportunity still. But when stocks dip, I like to buy, the buying the dip method. I like to buy on red days. Of course, right now with the whole market dipping, of course, it's going to be a little bit different. But I do believe that this is still going to be a great spot for this. Because, again, you're going to get 20, or if you buy one share, you're going to end up with 20 shares. And I think that's great. Because, again, Google is going to control everything. What you are watching this on right now, YouTube, is controlled by Google. They own it, guys. Remember that. Google Ads. Honestly, a lot of things that you're going to do in your normal daily life on the internet, you're going to end up hitting Google. I mean, if you look up a stock price or you ask Siri what a stock price is, or ask them anything, where the local restaurant is, more than likely it's going to pull up Google. And that's great. I mean, there's nothing wrong with that. But this is a time to where you can get back in at a really good spot. Because what happens when these really high dollar stocks go down low enough to where the general public can really afford to grab some shares is that normally the demand goes up for these stocks and allows you to purchase more shares. So again, I want to get rid of this. And we want to go in here to Thinkorswim real fast. And grab this window. So, again, this one, it's been a year. I mean, it's just been uptrending just like everything else. It's had its faults in 2020, just like everything else has. But we're on a down little pattern here because of what's going on in Ukraine and everything else. But again, Google. If you want to go into the Analyze tab, or, hold on, where's it at? Economic data, I think is where it's at. Maybe we're in the fun. Here it is. Sorry about that. You can see it's been as low as $820. We're basically at IPO'd. And then now we are up near the top, but they've got solid cash flows in absolutely everything that they do. Guys, look at the revenue continuing to grow up. I mean, everything that they do has been fantastic, and they've done nothing but sit here and make more and more money for people. And the one thing that we always like to do is, again, we're just going to click here, Portfolio Visualizer, and why we do this is for one reason. We want to know how does it compete with other ones. So of course we're going to include year to date, yes. And this is easy for you guys to do. $10,000 cash flows, contribute fixed amount, and we're going to say again why we do it is $500 is the average car payment in America. So that's what we do, and we're going to do it monthly. Rebalance annually, we don't want any rebalancing. Leverage type, none. Reinvest dividends, yes. Display income, yes. And then we're just going to custom these, and we are going to type in SPY. Caps lock this, and again, I just like showing you guys this, what we're going to compare it to, GOOGL, and then we're going to compare it with Apple too, because I think AAPL, or my bad, is a good one. To look at it with. Oh, I did it wrong. I am so sorry, guys. SPY, 100%. Google, 100% of this portfolio, and then AAPL, Apple, and 100%. And just kind of what we're going to do here is we're going to click Analyze, just because I want to show you how well these companies have done in the past. Obviously, SPY is going down below these, and this is starting in 2005. If you would have just put $10,000 and then $500 a month into these since 2005, you would have made over $1 million on these. SPY, you would only be at $500,000. But again, how much do you believe in these? Because I love Google, I love Apple, I love both these companies. They do fantastic. I've made large chunks of both, or off of both of these companies. And then now here is where the difference is going to be kind of here, is going to be in your income. Now obviously, Apple's going to have a higher, and obviously because Google doesn't pay a dividend here, it doesn't look like, they're not even going to be in the income portion. But if you would have just bought the stock and compounded that portion of it, you would have been fine. You wouldn't have even needed to do that or to have the dividend. So yes, Google is still going to make you more with not paying a dividend than SPY ever would have here with only that. Now obviously Apple is the absolute choice here, and Steve Jobs and Tim Cook have done an amazing job with Apple. So that is up to you on these kind of things here. What do you want to do? But this whole 20-to-1 right here is a big thing that I'm not sure is going to happen for quite a while. So remember that. Make sure you guys are doing your research. Do what you think you need to do. If you don't like Google, then don't buy Google. But this is something that I don't think a lot of people knew about, and even I am late to the party, so I needed to make a video sharing more people that, hey, this is going to happen and this is a big deal. So with that being said, guys, thank you guys all for watching this video. I hope this helps somebody else out, and I look forward to seeing you guys in the next one.